You are the steward of trillions of dollars. How do you see the investment environment shaping up in 2025?
So one of the interesting things about being at a global conference like this is you can feel the tectonic plates sort of shifting. And I would say the last 18 months, we've seen one of the biggest geographic rotations in capital that we've seen. In Europe, you really don't see new money going into Europe. And you mentioned the Chancellor's big speech today. We'll see whether she can sell her invest speech. But at the moment, investors are in a wait-and-see mode. Europe is no bigger now than it was in 2018. And so most people are quite skeptical about growth there. You spend time in Asia, and Japan is having a moment. You can really feel the energy there. Southeast Asia is really booming, and there's a lot of capital going in there. And not so much in China. At the moment, people are very much on the sidelines for China. And then you come to the United States. And there's no question that the U.S. has been the standout economy of the year. I thought David's comments earlier were exactly right, that we've all been surprised at the resilience of that. And so you're seeing capital not going into Europe, and instead really shifting to parts of Asia and certainly in the U.S. And most CIOs that I talk to would say, I'm nervous about the overweight to the U.S., but it's the right thing to do at the moment.
Okay, that's so interesting. And, also picking up on what David Solomon was saying, he's basically suggesting, look, investors are in watch and wait mode until they can ultimately determine what happens next week, post-US election. Looking at the stock and bond markets right now, they're telling us basically two different stories. So what are the macro and market implications of either scenario playing out, and what are you watching specifically?
Yeah, there's no question, and it is always interesting that the stock and bond market often do have different interpretations. You can decide whether you're an optimist or a pessimist, usually based on that. But the truth of it is, we're long-term investors. We, invest as a kind of our insurance heritage goes over long market cycles. And the reality of it is that elections come and go, administrations come and go, and investment opportunities will remain under either administration. I think the biggest lesson that I try to propound at these is that people who try to take big themes and invest around those from an administration invariably are disappointed. There's just too much slippage between intent of policy, execution of policy, and then what we all do as investors. And so whether or not you think energy is up or inflation is down or one of these other big themes, trying to turn that particular intent into investing is generally a fool's errand.
One of the things you mentioned on the panel yesterday was that perhaps you're a little bit disappointed that fiscal discipline is not on the ballot here. Is that an issue for you as a large investor, and what does it mean long term for the U.S.?
No, it really is. I mean, one of the certainties is that the loser in this election will be the U.S. balance sheet, and I think that that's absolutely right. There's been virtually no discussion by either party of fiscal discipline, and I think that that does worry us. We're certainly projecting, and the government is projecting, very high levels of debt, and of course, if interest rates stay high, we're going to now have an interest rate, an interest cost that is now going to rival what we spend on the military, and that's a very scary scenario, and that's one of the things that's spooking the bond market for sure.